Alrighty ho, yo. We are live on this beautiful Wednesday afternoon. God bless everybody in Jesus' name. I pray you are blessed in many ways, as today is the day we have been waiting for. That's right. F to the O, to the M, to the C. F to the O, to the M, to the C, baby. Today, our good friend Jerome Powell will be making a statement. He will be telling us the condition of our economy, telling us whether or not inflation is going up or going down. And of course, we know that they're expecting nothing to happen, but we know nothing actually means something. In the world of trading YouTube, us trading YouTubers use every possible news event to capitalize on your viewership. Which reminds me to tell you to smash the like button and subscribe to the channel, because we're bringing you the juiciest FOMC updates here on YouTube. Grab your plungers, take a lick, because it's about to get crazy up in here when Jerome Powell comes out the dang closet, flapping the gums, telling us exactly what is going to happen. All right, now we have to talk about the Bitcoin. His Bitcoin price right now is coming down to a absolutely crucial area, guys. All right, let's hang on. Let me adjust the screen here. Let's not forget the reality of the situation, y'all. The reality of the situation is this: the Bitcoin price, as you can see, is coming down to a very critical support, and your boy got absolutely sliced up today. It's been my worst day trading in a long time, actually. In quite some time. I actually don't remember the last time I had such a horrible day trading. I'm down about $4 on the day right now from various trades that I've taken. All right, what the heck? Oh, here we go. Okay, I'm in a long right now. Okay, I'm in a little long right now. I've taken today, guys. I have taken these losses here, about $3 for about $3 of losses here. Plus another loss that I took as well. All right. Yeah, 2 losses, guys. Trying to catch the falling knife. All right, let's see. Here we go. Where's the other loss I took? I don't know. I have a whole bunch of screenshots of trades that I've taken, all right? But, guys, for the past few weeks, I've been crushing it. I've been literally crushing it, all right? 3K, 9K, 4K, 5K, 8K, 3K, 4K, and some scalps. And plus, that doesn't include the juicy $32,000 trade I've taken. And I've taken losses as well. But my losses have been calculated, and I have not had a losing streak until today. All right, I have been crushing it every single day for the past 3 weeks. Today, I'm down. All right, this is my last chance of taking along from this low here. All right, and the reason why I'm taking along from this area, guys, is simply because the price is coming to the value area high of the range. All right, we cannot lose sight of how critical, and how crucial this is. Look, we're gonna go ahead and we're gonna pull our fixed range volume profile right here. All right, boom. Guys, look at what's happening right now. The price is coming to the value area high of this range here. If the price loses this level, we are going to take a massive dump for Bitcoin. Today is the make it or break it day. Jerome Powell is going to either save us or condemn us to the Bitcoin underworld. This orange line, and we're going to make it orange. This is the orange Bitcoin line that will either hold and we make a new high, but if we lose it, guys, we are probably coming down to 68K or lower. And I'd say the probabilities are highest that we would actually come lower towards $60,000. The reason I say that is because, well, we can't lose this level after what has happened. You cannot get a fake out once, come down and bounce from support, get a fake out twice and hold support, and then make a higher high and then lose it again. That's not how it works, right? This level really does need to hold. And we're going to be watching it happen. There's going to be some volatility when Jerome Powell comes out the dang closet, flapping the gums, popping and gropping, plopping and stopping. All right? Plopping and stopping, guys. That's what he's going to be doing when he comes out the dang closet. Now, we're going to pop on over to TradingView. We're going to mark out some key levels as we are preparing for the man himself, Jerome Powell, once again to come out. All right? He's always coming out. All right? He's been trying to figure out a way his whole life to come out to his friends and family. He doesn't know if they'll understand when he tells them the truth after all these years. The truth is, all the money's fake. Fiat currency is definitely going to hyperinflate or collapse. And the Federal Reserve has been stealing your wealth for the past 113 years. Didn't know how you take out Jerome Powell. He's been living this lie. He has to come out and say it. Now, when he comes out and says it, let's take a look at the chart here. I'm going to go to a blank chart. We're gonna go to a blank chart here, because we do need to mark out some crucial levels for Bitcoin. All right, let's go to the 4 hour. Let's take a look at what's happening here. All right, let's remove all our drawings. This is Coinbase. Let's not go to Coinbase, guys. We need to go to Bybit, because when it comes to accurate levels, Bybit is the way. All right, let's remove everything from the chart. Once again, guys, we're simply going to draw the range first and recognize that if we close the daily below 71.3, very, very bad for the Bitcoin price. Now, where else could we maybe find support? Well, if we pull the local Fibonacci from the most recent low that we made right here to the most recent high, you can see that there is a chance that we come and we take the Saturday low and get a bounce right into this juicy box of goodness between Saturday's low and the Fibonacci golden pocket, to simply just trade what I would consider a sideways range, right? We have a pretty clearly defined high and low, I would say, from these levels, right? Pretty clearly defined high and low. We've got our high of the range up here. Again, we have the high of the range here. And you could say we have the low of the range right here around $70,000. We also have a very high volume node from this little chunk of price action right here to come and just dip into the box, dip our toe into the box. This would have to happen on a Jerome Powell press conference where we get a dump just to take the liquidity, and then we get a pump. And we close the candle above 70,003, right? That is one scenario. But a more likely scenario, I would say, is we actually come and we come all the way back down towards $68,000, where we have the point of control of this range. Right? Because when you close the candle below the range, probabilities are highest, we come down to the bottom of the range. When we took a juicy short trade from $72,000 in the Casper Crew VIP Discord, and we shorted that thing all the way down, right? We shorted that thing all the way down. Let's see, where was that trade? Where was that trade? From 72K, yeah. 72K. We shorted that thing all the way down, man. We made a juicy $8,000. The reason why, right, the reason why we shorted that is because we lost the range, all right? That's not the reason we shorted. We had an entry up here, but the reason why we were calling for so low after we took the short is because we closed the candle below the range. Look, when you close the 4 hour candle below the orange line, guess what? Back test as resistance, boom, we come down. Right now, we are doing the dance. We are doing the dirty dance again. Are we going to close the candle below the range? Yay or nay? It's going to happen today. It's a Wednesday. Wednesday, Jerome Powell comes out to play. You know, what's he going to say? So if we cannot hold this orange line, it is not looking good for Bitcoin. All right. And then I would suspect we're coming down most likely to 68, and then I'd say we're probably going to come to the bottom of the overall range here. Now, again, I'm not making a prediction that's going to happen. Why? Because these are if-then scenarios. If we lose the orange line, then yeah, we look for a short down to here. Seriously. Just like over here. You lose the orange line, you get a back test, you look for a short. We have not done that yet. So I'm not calling for this level. I'm saying if, after today especially, we close the candle below, we back test, then look for this, man. Seriously. But if we close the daily candle above, then I would say that is a very strong thing for Bitcoin, because holding above this level is once again showing us, I'd say, that the market does want to trade Bitcoin at higher prices. I want to drill in how important this level is. The reason why it's so important now is because look at all the hanky-panky that's happened here. It was resistance, it was resistance, it was resistance. Then we have a real breakout higher high, and now we're getting another back test. And not only are we getting a back test, but we're trying to bounce from this kind of trend line here. We have this like ascending channel thing going on. Again, this is why I've been looking for longs all morning. This is why I've been getting wrecked all morning, because I've still got those bull goggles on, and I'm still looking for higher. Because overall, we still are in an uptrend. So I'm looking for this zone to hold here, okay? Now, we go to the daily. This is where things get scary. The daily is printing and might confirm a red dot. Historically speaking, the red dot on the daily is bad news. It's just bad news. It means next few days, sideways and down. Right? Next few days, sideways and down. That's what it means. So, oh no! What's happening? Bitcoin crossing level. Check chart. Now we look at trade. Ooh, trade go up. Okay, blue candle. Very good. Blue candle. We like blue candle. We go to 1 minute. What is happening on the 1 minute? We are taking the high of the local range here on the 1 minute. Let's see what's going to happen here. Oh man. Let's go back to trading view. Let's take a look. We're going to go to trading view. We're going to go down to our low time frame here, the 1 minute time frame. We're going to take a look at what's happening here. Money flow looking decent on the 1 minute. Let's go to the 5 second. Money flow looking decent on the 5 second. Let's go to the 12 minute. 12 minute looking decent. Let's go to the 2 hour. 2 hour potentially does have some upside here. Yeah, you know what? You know what, guys? You know what would be an ideal scenario for me? Would honestly, to form a bit of a range here, a little bit of a range, and then come take those lows again, that liquidity, and look for a long trade once again as this 12-minute money flow is getting higher. Because when we look at the 4 hour, we are seeing a potential juicy trigger wave here after a bullish divergence at the low, right? Bullish divergence at the low, continuation pattern right here with money flow thickening. I have to say, like, excuse me. I know I've taken some losses today trying to catch this falling knife, but it doesn't change the fact that I'm looking for longs here, and I'm hoping we can get a big bounce at the end of the day. I'm hoping we can invalidate this stupid red dot on market Cipher B, right? That's what I'm really hoping for. We'll have to see what happens. At the very least, I would love to see some meat that we can snag here, and maybe, if we're going to drop, maybe get a head and shoulders or something like that, right? So we'll have to wait and see how that plays out as JP comes out. Wait and see how it plays out as JP comes out. All right, Bitcoin trying to get a little bit of a move up here. Beer div on the 1 minute. My Beautiful Life, LMAO. Well, here's the thing. Beer div on the 1 minute. All right. I would like to just have you go and watch this stream I did yesterday, guys, where I used the 5 second and 1 minute time frames to basically make $2,000 in an hour. All right. Go start watching it. Half an hour in yesterday's live stream, New York Open scalping, 9 trades, $2,000 profit. All right, go watch as I'm literally using the 5 second time frame to print money. Basically, look, we're up $500. This is the 5 second time frame trade. Then we literally flip short after we take the profit. We flip short. We make the profit on the way down. All right. Then we flip long again. We make profit on the long again. Just using the 5 second time frame. All right. Go check it out. All right. It's not, I know it sounds funny, but the 5 second time frame has literally been printing money for me for the past 3 weeks. All right. Now we are taking the local high right here. Let's go to the 5 second time frame. And let's see what she says. All right. The 5-second time frame, the signal I look for on the 5-second time frame is not what we're seeing here. All right. Sounds crazy, I know. Sounds crazy, I know. All right. But let's check out our 1 minute. 1 minute, better eat your spinach on the 1 minute. And speaking of that, guys, I have a scalping group. It's free to join. If you want to join my scalping group, where I live scalp, it's not financial advice, all right? All you have to do is sign up to one of the exchanges that I affiliate with, and in my free Discord, you can take the user ID of the exchange that you have signed up for, either KCEX, put your user ID in, you'll get into the group, BLOFIN, put your user ID, you can get into the group, or ANTARCTIC, put your user ID, you can get into the group, and we will be live scalping multiple times a week in here when the scalps are juicy. All right, so there's no schedule for it. It has to just be when the scalps are juicy. Okay. So I know people laugh at the 5-second time frame, but 5-second time frame, that's where it's at, man. That's where it's at. Like, especially when we're in Chop City. All right, when we're in Chop City, the 5-second time frame is where it's at. Now, zooming in a little bit more here. Let's zoom out and then we'll zoom in. We can see that we have had a very large increase of open interest on the way down here. I want you to just notice that so far, this fall, this drift to the downside, we've had many shorts open up into the low, and many shorts are still open. So this means right now, so far, because we're in a downtrend, the shorts are technically still in control. We have seen some longs opening up since this higher low here. So it actually is a fight. There's a lot of new money coming in right here. And what this means, guys, is it is a recipe for insane volatility when we get this news. You know, basically from this, all of this chunk here, we have seen a major increase of open interest. This means traders are opening brand new positions. They're putting money into the market. Primarily, they have been shorts opening up as we have come to the low. In fact, at the exact low, we've seen 264 million shorts at the low. Isn't that pretty wild? And then we start to see lots of longs opening up, right? Lots of longs opening up. We don't necessarily see a bullish CVD divergence here. But what we do see is we see a lot of liquidity, right? We see a lot of people who are in trades, which could lead to a squeeze when we get the news, right? We could easily come up to $72,600, or we could also easily wreck all the longs that have opened up in this little chunk of price action, right? So we are in Chop City. We're chopping along. Very interesting. When we take a look at market Cipher, let's take a look at market Cipher B. We have nice bottoms on the 2 hour. We have a nice bottom on the 1 hour. We have on the 24-minute potential bullish divergence forming if we make another low, but also this thing is pretty bottomed out, making me think we could get that move up to 72,600, where we have a nice support resistance flip. Right, we've got a nice support resistance flip coming in right around here. Also, if we take the Fibonacci from the high to the current low, let's see if we have our 382 in that area. Nah, it doesn't really line up too nice. 72.8 is our 382. Yeah, we could see a move up here. And really our major resistance right now, like if we're actually going to see a legit pump and short squeeze, 74K is going to be the level to look out for, because 74K is the high from the 4th of March. It's the high from the 13th of March. It was resistance on the 16th, and then of course we fake out, but then it's been consolidation here from the 17th all the way until we lost it yesterday, or I guess technically speaking this morning, right? So we need to be on the lookout for that, and I'm very excited to see what is going to ensue as Jerome Powell comes out. Do I have any open positions now? Yeah, I do. I have some open Bitcoin positions now. I'm still long from 65K. I'm still short from 97K. And then other than that, I've just got these guys open. All right. I've got these two guys open here. I've got a short and I've got a long open right now on Bitcoin. All right. And I've had a really bad day of trading. All right. I have taken today. These are 2 of my 3 losses on this account. All right. So I took my $6,000 loss on the 16th. All right, that was 2 days ago. This trade, actually, the $16,000 loss was also, that same trade. I took a $6,000 loss, but on a separate account, I locked in a $4,000 win because one, I was trying to swing trade, the other, I was trying to scalp. I hit my $32,000 win from last Friday. All right, that was the one that I told the community I'm taking the dang trade. All right, because that's what we do in the Casper crew. We make the plan. I let people know what I'm doing, win and loss. It ain't no financial advice. All right. Then I took another loss this morning. It was another about $1,000, like 800. So I'm down. Down today. I took 3 losses in a row. This is now my 4th long of the day, and it's in profit, but not much. We're going to see what happens here. And that's pretty much it. Those are my current Bitcoin positions. I've got 2 longs and 2 shorts open. These are the biggest positions I have. The other ones are smaller. I've got $200,000 on a short, and I have about $100,000 on a long. All right. This is my 4th long of a day. The first 3 are losses. Those are my current positions. All right. All right, let's see what happens here. Again, crucial level at the value area high. Yeah, we're bouncing from a very key level. Yo, major shout to Radar Apologetics. What is going on, bro? God bless you, my man. God bless you, bro. Heard Evan Aldo talking about 76K being the yearly anchored VWAP. Can you confirm? If Evan Aldo says it, I trust the man. All right, I trust Evan Aldo. I really do. I trust Evan because, look, here's why you can trust Evan Aldo. Okay, Evan Aldo does not give a crap about being flashy, about being sensational, about YouTube views. All right, but he actually, he lives this life, right? I trust the dude. All right, he's a full-time trader. He travels the world. He's financially free. And he doesn't have any kind of incentive. He's not trying to steal your money, right? He's not trying to shill coins to you. I mean, obviously, he has his affiliate links and all that, like all us YouTubers do. But smaller channels that walk the walk, you can trust them a lot more than bigger channels that you don't know what the heck is going on behind the scenes, all right? Shouts to Evan Aldo, all right? I like that guy. I've had so many conversations with him. He's just such a cool guy. I really like him a lot, all right? He's the kind of guy where I feel like I've always known him, even though I've never even met him in real life. All right? So. Okay, so Bitcoin getting a little bit of a move here. In about 10 minutes, Jerome Powell will make the announcement. All right? Again, guys, the orange line that we have on the chart here, this is the very important make it or break it for Bitcoin. All right. This is a very important make it or break it for Bitcoin. Let's go and take a look at TradingView once again. This is the value area high of the entire range, guys. So if we do not hold this orange line, the probabilities are highest that Bitcoin is going to get a significant move to the downside. All right. Let's pull some other fibs. Is there any other confluence here? I think there might be some other confluences here. We're kind of around a golden pocket. We're kind of around a 786. Like, I don't know. Like I said, I got chopped up this morning. Is my screen screwed up here? I got chopped up this morning, guys. Trying to long on the way down. I tried to long the golden pocket from the low to the high. right here. I tried to long the golden pocket twice. All right, I tried to long it twice. I tried to long the 786 the first time here. All right. Obviously, that did not work out for me. Right? So now I'm in a long again as I see we're getting a bounce from the value area high. So let's see. Let's see. So sad you didn't short. I'm sad that I didn't short from a trade that I had planned for. Essentially, I got short when we lost local market structure. Right? So originally I was in a $1 million long. You guys, I was live streaming it. $1 million position. Longed the breakout here. If you guys remember, longed the breakout. When we broke this, we came for the back test, longed this up to here. And essentially, once we changed the structure and we made a lower low here, I entered into a small short position because I was in a $1 million long, up tens of thousands of dollars. I had more to risk by not shorting than shorting, but I was hoping for, yesterday, a move up to the golden pocket. My planned short yesterday was to short this, and man, was it looking good. We were building liquidity above the level. I thought, man, this is great. I thought, man, this is going to be so awesome. We're forming a triangle. We're going to get a fake out of the triangle. We're going to smash right into my level. We're going to stop hunt all these people. I'm going to load up on a $750,000 trade with a really good risk to reward ratio. You know what I'm saying? And I'm going to short this thing all the way down, but that didn't happen. Instead, what happened is we front ran the level, and then when we broke down again today, I added a little bit more to the short trade, and that's just what I had to do. You know, trading is so weird, guys, because look, here's the thing. Like, for the past 3 weeks, I have been in the freaking zone with Bitcoin. Like, me and Bitcoin have been like this, all right? I've been scalping the 5-second time frame. I've been printing money. Just almost, it was just, I'm even surprised at how good I was doing. I'm like, this is crazy, right? You're in that groove, the Bitcoin groove. And then, one day, you're not in the groove anymore. That will happen to every single trader. That happens to me all the time. I'm sure all you traders can relate. You're in the groove, and then you're not. And that's why risk management is of utmost importance, because when you're in the winning groove, it's so easy to feel overconfident. It really is. Even though I've been doing this for a very long time, it's still so easy to feel overconfident. And if you feel overconfident and you're not using good risk management, you're going to lose so much money. But if you're feeling confident and you're using good risk management, you can take those losses and it's not going to take you out. In fact, you should still be able to take multiple losses and not give back all your dang gains. Like, seriously, you know what I'm saying? So I'm going to see what happens for the rest of the week here as far as my own trading goes. But locally here, we do have a 1 minute bear div as we're taking the high. Let's go to the 5-second. Look at this. Now, the 5-second, people say the 5-second time frame is silly, but the signal that I use on the 5-second that I've been scalping with, I've been doing it live. Like I said, go watch the dang stream from yesterday, guys, where I'm scalping the 5-second time frame live, all right, in the moment during New York Open. 5-second time frame, go check it out. All right. The signal that I use to get into 5-second time frame trades is this: the price makes a higher high at a key level, the money flow gets lower. All right. The money flow on market Cipher B gets lower, and the momentum wave also get lower. So that's the signal for a 5-second scalp. All right. Now, the best confluences are when the 5-second and the 1 minute both give the signal. And I've been messing around with USDT dominance as an added indicator. If USDT dominance gives you bullish divergence, right, where USDT dominance makes a lower low and the oscillator makes a higher low with the money flow, while Bitcoin is also doing the bearish divergence, that's an added confluence, right? You want to see USDT doing the opposite of what Bitcoin's doing. That's an added confluence. And honestly, I've been messing around with this, and it's really awesome for scalping. All right, for scalping. What do I mean by scalping? I mean, you get in and you take your money and you get out. All right, I'm not talking about swing trades and day trades, right? So let's see here. No rate cuts will take us downtown, baby. Shout out to Preparing for War. He says Jason likes Bybit. Preparing for War likes Coinbase. Yeah, I do like Bybit. I do like Bybit quite a bit, you know. Coinbase, look, everyone's got their own dang chart to use. I know Divine Hood uses Coinbase, you know. Divine Hood uses Coinbase. You know, it is what it is. Everyone's free to use their own charts. You know, everyone's free to use their own charts and do what they want to do. But for me, I trust the Bybit chart a lot. And I really do. I trust it a lot. All right, here we go, baby. Let's see if the 5-second signal gives us more. Right? Once we change market structure, then we can come down more. We're gonna go to the 1 hour. All right, let's close this. Let's lower this. Let's bring this down here. All right, let's see what happens. As in 3 minutes, we're going to get the news. All right, we're going to go to forexfactory.com. It's the countdown, the final countdown. All right, it's the final countdown. Final countdown.
This beat is brought to you by thesickbeats.com.
The final countdown. I'm so nervous, guys. Here we go. 1 minute left. Let's see what Bitcoin's gonna do. I'm freaking out. Yo. Here we go, baby.
This beat is brought to you by thesickbeats.com.
Jay Castro, 1 minute left. About to see what Bitcoin does next. Got a strange feeling up in my chest. Gonna see what happens when I do my best. Jay Powell coming out of the closet, about to spit. Where do we stop it? Are we gonna pump? Are we gonna dump? Jay Casper coming out, pain in the rump. Here we go, just like Donald Trump and Kamala. Bears in the bulls, don't you know you wanna holla at ya? Looking like a fool in the boat, in the front, in the hole. Yeah. Candles turning purple, candles turning blue. Bitcoin price about to show you what you gonna do. Jay Casper up, can you spot it? But we're about to bounce from the next golden pocket. Jay Casper chilling in the house. Trading him for the Bitcoin bounce. Oh snap, baby, let me see a peek. Market Cipher B, any uneven cheeks. We want big on the left, so juicy, skinny on the right to round out the booty. And can you even spot it? But we're about to bounce to the next golden pocket that we rocket to be top it, baby. Don't stop it. Coming out like Sonic and Robotnik. Got the candles turning purple, turning blue. Bitcoin gonna show you what you do. Here we go. 5, 4, 3, 2. Let's see what's gonna happen, guys. We're starting with a pump. Oh my goodness. Oh my goodness. Let's see what happens here. We got a crazy pump. That is pretty nuts. Okay. What was that? It was basically probably exactly as predicted, right? Yeah, exactly as predicted. We got a bounce, baby. We got a little bit of a bounce. All right, let's see what happens. Are we going to turn it and dump it? Are we going to turn it and dump it?
This beat is brought to you by the sick beats.
We usually do a pump and dump. Let's see what happens here, guys. All right, enough of the final countdown because we've already counted down. Let's see. Are we going to hold a higher high here? All right, man. I should have gone bigger on the long, huh? Let's see what's going to happen. Let's see what's going to happen here. We always usually get a pump and a dump, and then in about half an hour, he will come out with the press conference. The press conference. Let's check out our 1 minute. 1 minute has some bear div, I ain't gonna lie. 1 minute has some bear div, I ain't gonna lie. I think we might come down. I think we might try and go for these lows. I think we might try and go for the lows. Let's see what happens here. Let's keep our eyes on the chart. Let's check out our 5 second. Man, if we do go for those lows, that would actually be a pretty nice 5 second signal. Just saying. Just throwing it out there. All right. Are we going to lose the green line? Losing the green line will take us down into the bottom of the basement here, which is going to be this. Let's pull our local range. All right, let's pull the local range. Let's look at this here. Excuse me. Yeah, I think losing the green line will take us down to 71.5 at least. All right, let's check out the order flow. What happened here? We'll go to the 1 minute. The announcement had about 100 million longs open up on the announcement. That's quite a few longs. And then we've had another 4 million open up here. Yeah, we start to lose this and we will have longs trapped, but so far we're holding. So far we're holding. Let's see. We come down. I'm definitely interested in this area right around here. This blue line. To look and see what the chart looks like here. Here, bitty bitty. Here, bitty bitty Bitcoin. Itty bitty Bitcoin. Losing the green, the yellow, and the blue line, and dancing no. I want the lows to get swept. That would be pretty nice to sweep the lows. That would be pretty nice to sweep those lows. Let's see. So far, we are holding here, guys. So far, we are holding here. All right. So far, we are holding. So, again, when the news comes out, we get a little bit of volatility, usually followed by the press conference. We choose a direction. No rate cuts this year. Who knows, honestly. I got money on the 0 and the 00. Says Kodak. Kodak says bitty bitty. Bid-ask spread. Look at this. We're holding. We're holding that key level. We didn't lose it. We're back up to the highs. Let's see. We're forming this mini range right up here. Let's see this. We come to the high of the mini range. Very key to see what's going to happen here. All right. Get a little bit of a push down from the... All right. Wow. Breakout, baby. Oh, man. All right, this is interesting. All right, this is interesting. All right, let's pop on over to the other chart. All right, I am pretty curious to see what happens here. All right, here we go. Let's make this smaller. All right, we'll go to our 1 minute. Remember, guys, this is such a key level here. This orange line is such a key level. And we're going to mark out some key support resistance flips here. Obviously, the juiciest level, if we get a move down during the press conference, would be to come down to 70,000. Because technically speaking, we do have ourselves a bit of a sideways range, right? So we'll remove this orange line here. Let's see. Let's see what happens here, man. Can we continue in the bullish structure? Can we hold the green lines? If we can, I might have to start taking some risky behaviors up in here, if you know what I'm saying. Does it really matter what the interest rates are? Not particularly. Not particularly. But here's the deal, guys. All right, here is the real deal. All right, the real deal is this. I've got to pee. All right, I'll be right back. All right, we're back, baby. We're back. We're back. We're back, y'all. We're back, y'all. We're backer than back, and we're back, y'all. All right, let's see what happens here. Let's see what happens here. Shouts to everybody in the chat right now. Jay typing on his phone mid-P. Bitcoin pro-Ping. Yeah, the water jug, guys, actually, the P jug is full of water right now. It's actually full of actual water. You know? So, it's actually got water in it, which is a sad situation, if you know what I mean. All right, it's a sad situation, if you know what I mean. I think we might be able to squeeze up to 72.5. I'm very curious to see. Okay, now remember, JP comes out in a little bit, and we get a little bit more volatility. So let's pull some fibs here. We pull the fib from the low to the high. Hang on. Man, I hope we get a big old dump when Jerome Powell speaks and come down either to this area here or take the low. That would be really nice, because I know I'm in a little bit of a long, but I would like to be in a much bigger position here. More than 100,000. Beer divs on the 5 second. Let's check it out. We do have some beer divs on the yeah, we do, and the money flow's coming down too. All right, let's see what happens. Beer divs on the 5 second. Let's dump it down, baby. Let's dump this down. Let's dump it down, baby. Whoa, why is the treadmill stopping? That's not what we want. That's not what I want. I want the treadmill to keep pumping. I don't want the treadmill dumping. There we go. And yeah. There we go. see the order flow. Wow, even more longs starting to open here. We're starting to form maybe a little bit of local bear CBD here. For me, the big the big level to lose is going to be 71,724 here. That's going to be the big one. Until then, we're still in this dreadful little mini uptrend here. It's hodling, man. It's hodling. All right. How do we have electricity in Cuba? Look, there's generators, there's Starlink. You can do anything nowadays. All right. What is this song? This is just some royalty-free music, guys. Royalty-free music. We are doing a decent job holding this price. I'm contemplating adding to my long trade here, but I'm going to give it a little bit more time. I'm going to give it a little bit more time, and I would prefer to wait for the press conference. We have not recovered 60% of the dump, says somebody in the chat. No, the dump is from 76K. We have recovered about 20%. About 20% of the dump. All right, so we've recovered about 20% of the dump. This song gives you anxiety. Well, we're waiting for Jerome Powell to come out. It should be an anxious moment. You guys hate this beat? Fine. We'll pick something else. Let's pick something else. All right? Just for you guys, we're going to pick something else. Let's see. What do we got? What do we even got? This is royalty-free music. I don't even... Oh, you know what? You know what we need? We need some red elephant beats. Hang on. We need some red elephant beats. Let's get some red elephant beats. Guys, make sure to smash the likes. All right? Smash up the likes. And we'll get some red elephant beats up in here. While we wait for Jerome Powell, we'll listen to Red Elephant's music. All right, we're taking a Doomperoni. Doomperoni. Hang on, let me move my stop loss on this long trade just to be safe. All right. You know what? Let's see. Let's see what happens here. Let's go back to this chart. Let's go back to this chart. Let's go to our 5-second. All right, in about 22 minutes, Jerome Powell is going to speak. And I do believe that's where the real volatility will ensue, guys. All right. Value area high. Getting a bounce from value area high. The 5-second says we're coming down a bit lower here. The 12-minute looks like we could print a dirty trigger. The 6 minutes got the trigger wave. Honestly, what would be really nice here is maybe a move down to this zone right here for a higher low, or go for the overall low. Trump should tweet at the same time as Jerome Powell for sure. Do we have any pool squirt toys? No, I don't. I do not. I do not. I do not. Alright, I can't wait until Jerome Powell starts to speak, guys. Yeah, 12 minutes. 12 minutes. No, 8 minutes. 8 minutes until the press conference. 8 minutes until the press conference. Let's check it on FOREX Factory. Yeah, so we've got about 8 minutes. So let's go to fednow.gov. All right, we're ready. We're ready to go, baby. 7 minutes. Yeah, ayo. Ever wonder why the price pumps up just to die, just to come down? You know we gotta fly. Next thing I know, I'm running out of time. Jay Casper, for a white guy, he's so fly. We're waiting for JP. The Bitcoin price, listen to me. We're gonna dump, then we go wee-hee. To the next level, looking for a TP. On the profit, don't you know I gotta spot it? Cause the price is coming right up to the next golden pocket. Then we sock it and we rock it just like Sonic and Robotnik. Tippy top it, never drop it. Market makers trying to spot it. Cause we in Shop City. Bitcoin price, what a pity. Candles were blue, but now they're purple. Jay Casper, such a nerd like Steve Urkel. Go to 7-Eleven, I got a slushie to slurp, yo. Got the gas in my belly, I got a burp, yo. Next thing I know, I look like a big dirt, yo. We're coming down, you know I don't hurt. We're taking the profit. Can you spot it? All right, we got 5 minutes. We got 5 minutes. Let's see what happens here. 5 minutos. 5 minutos. This is some tight consolidation, man. Look at this. This is some real tight consolidation. Three minutes. Rap about fat, lopsided cellulite butts. Fat, lopsided cellulite butts. Rap about fat, lopsided cellulite butts. I think I could do it. Yeah. Minding my own business, walking down the street, and what? Oh my goodness, I just saw a fat cellulite butt. The price. You know, it's so disturbing. To the curb, just like Kyrie Irving. Don't you know? Is the earth a ball or is it flat? The Bitcoin price about to go splat. Jerome Powell coming out like that. With the interest rates like a cool cat. JP, better get your towel. Wipe off the sweat cause I'm nervous like Jerome Powell. Yeah, about to put the glasses on my face. Jay Casper treadmill run the race. Oh my goodness, can't believe what I saw. Fat cellulite butt. It makes me gasp, it's so dang disturbing, the Bitcoin price. I hope you don't hurt me with the look of the butt with the cellulite. The bears and the bulls about to get in a fight. Yeah, are we pumping or we dumping? Bitcoin straight up, Donald Trumpin'. That was the best I got about a fat cellulite butt. Alright, we got 1 minute. We got 1 minute, baby. All right, let's get ready. Let's mute and let's put on our good friend Jerome Powell. Here we go, baby.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total inflation, total core inflation, it's about 3%, and some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people, and so 19 reasons, 19 individual submissions. And if you notice, the median didn't change, but there was actually some movement toward a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially it is that, the forecast is that we will be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that. And, the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods. And on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil, but it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
The consumer's going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction that to your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down. We don't debate how long. How do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And also, what you've written down before you'll be reluctant to move too far away from that, just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs, with little growth in either demand or supply. But the U.S. economy is doing pretty well. It's just we don't know what the effects of this will be, and really no one does.
Steve.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past.
Yeah. So there'd be an offset.
Offsets, yeah.
So that's true. We're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable, and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, meaningfully higher. So I wouldn't say there's much of that happening. Not much of it happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment, and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that, having looked through tariff inflation and inflation running above target, and looking through the oil price shock, would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully, but of course that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision-making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had, we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And, it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%, and I think it's important that we do that. Very important.
Nick.
Nick Timoros, The Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well, as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices the tariffs are paid by consumers on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months, a year to go through the system, and we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system, so that goods inflation will return closer to what it's always been. I mean, it used to be for many years it was negative, and then the year before tariffs came in, it was 0, and it's running at like 2%.
Wow, we hit this level.
Now, so,
I didn't notice that.
And so that's kind of goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates, or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance the risks, and we feel like where we are now, which is kind of on that borderline, the higher borderline of restrictive versus not restrictive, we feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services. But we're not seeing progress there. So we do, what we expect for next year is continued. What we want to see for this year, rather, is continued progress on housing services. Finally seeing that the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see, but it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can. We're at 3.0% core. inflation 2.8% headline. So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, or a full percentage point above 2% for some time. And that's a concern. You know, we need to get back down to 2%. And we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard-pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet, and I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times.
Wait a
People have
second.
drawn quite a few historical
I didn't know
parallels
Brits
with
were
the
allowed
current
in the
situation.
meeting.
We've seen oil prices.
I didn't know Brits were allowed in the meeting. What is this?
People have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
You know, it's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply-side story, has changed despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent, really, growth in the labor force, which, of course, we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now, that's balance, okay, but I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So, we look at that, we see it, we get it, and I mean, everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless, it's something we're watching carefully, and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless, something we watch carefully.
Andrew. Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to start taking account of the risk of supply shocks as a more common problem?
You know, we did go through a long period where the shocks were all demand shocks, and you know, so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing and a much more difficult thing, because it does immediately raise the question of tension between the 2 parts of our mandate. But, you know, has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And you know, the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But you know, there's people have written that paper and that speech a number of times. A number of people have tried to make the case that that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but you know, I guess, you know, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, you know, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And, I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The policy that the possibility, rather, that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question, though?
I was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is, it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens, and it'll come down to how long the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Maria Luisa.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service, in business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices?
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. But sorry, and your second question was just.
If there have been any discussions about the risk of stagflation scenario.
Yeah, so as I mentioned, there's tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. When we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal, and we have inflation that's 1 percentage point above that. So calling that stagflation, it's not. I would reserve the term stagflation for a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean,
oh, come on, Jerome. Come on, Jerome.
We always say we're going to learn more by the next meeting.
That's so funny.
And usually we do, but in this case, we're going to learn a lot, because we're going to learn 6 weeks to the day till the next meeting. And we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves with what happens in the Middle East. That's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So
Yes,
is
I would
it a
love to have
matter
him
of
come.
you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023 when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year, they should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that. I mean, I think that the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. So I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing, as our staff's been doing, it's very interesting. They started off with just an estimate because there wasn't a real history, and then they've built, based on the history that they're seeing of tariffs coming through into prices, they can now have an arc. And for all the tariffs, they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases. And we should start seeing that more and more in the middle parts of the year. We do expect that. Now, you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision. But the administration said they're going to move they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Thank you.
Chris Rugaber.
Hi, thank you. Chris Rugaber at Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. You know, it's your opinion at a moment in time, which can change based on events. You know, sometimes very quickly. So it never locks people in. You know, people are more than happy to be proven wrong in either direction, and so I just think we do it. And you know, I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think, but you know, we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one though, I think it's even more than usual good to take the forecast with a grain of salt, because subject to just very high levels of uncertainty.
Brian. Hi, Chair Powell. Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about on Main Street. Are there any signs to you that that's impacting the psychology of the consumer, especially given that they're a big driver of overall economic activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, you know, there were big price increases all around the world, by the way. Everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like real wages have been going up in the United States now for 3 years, roughly. But people are not feeling good about it yet, and it will take some years of positive real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed, and you know there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get to into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing, and you know what it does for us is, you know, makes us even more committed, if that's possible, to getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs, and you know, stable prices is half of our mandate. It's one of our two mandates, maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States, anywhere in the world, in a market economy, in a democracy, and you'll see, you know, pretty much central bank independence that looks a lot like, in some cases, stronger than what we have. But it's critical that we have that so that we can do the things when we need to do them to preserve price stability. And it's an accepted standard practice, and I think has a lot of support, certainly in Congress, which is where our oversight is in Congress. And you see that among Democrats and Republicans in the House and the Senate.
Richard.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this. Two questions. One, how high would oil prices and broader inflation have to go, and for how long, for the committee to consider hiking rates? And then secondly, diesel prices are rising faster than gas prices. How concerned are you that the increase in diesel might drive up food and goods prices and lead to broader inflation?
Yeah, I'm not going to give you an example or a specific answer on the first question. You know, we're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. You know, in terms of diesel prices. So your question there is, are we concerned about it? I mean,
how concerned, and whether or not it will drive up, you know, the cost of food and other goods that really rely on it to
so
move
I think
across the country.
It's a more general concern than that. It's diesel prices, because that's transportation of food and things like that. There are just lots of ways that oil and derivatives of oil get into the production and transportation of many things. So, and those, there are big effects in headline inflation, but things like that leak into core as well. And the effects may not be as big, but they're quite real and they're material. So we are aware of that and we're watching it, but we're right at the beginning of this, and we don't know how big we just don't know how big this will be and how long it lasts. It may or may not be something that really makes a big imprint on the U.S. economy. We're just going to have to wait and see.
Wait and see, word of the day. And it's more than one word.
Thanks very much. Just to sort of stare into the future for a little bit, I was looking at the longer run bits of the SEP and noticed that the growth estimate had been revised up a good chunk from 1.8 to 2, and the kind of long-term Fed funds rate as well. It'd be great just to hear, is that AI productivity or what's going on there exactly?
Yeah, I think it's just productivity. We actually started seeing meaningfully higher productivity some years ago, 4 years ago, 5 years ago, and that's not because of generative AI. We won't know for years what it's really due to, but it could be due to the kind of things that people did during the pandemic to economize and somehow become more productive because there was an incredible labor shortage. But I think economic forecasters are very skeptical of periods of high productivity because they're so rare and they're often revised away. And for many of us, I never thought I'd see this many years of really high productivity, and by the way, expect it to continue. And we haven't really started to see the effects of generative AI, and that should certainly contribute to that. So it's quite unusual, and it's this is the higher productivity is the thing that allows incomes to rise over time. And so it's a great thing. Was that your question?
Yeah, no, I was just curious what lay behind that. And just briefly on that as well to finish up, you hear the argument a lot, this is a sort of disinflationary story, and if you believe that productivity thing, that should also weigh down on inflation over time, maybe then kind of pull down where rates end up. Do you kind of agree with that line of thinking, or do you think that's not how you should think about where the rates
I think you have to be cautious about that, in particular if you're talking about AI, about generative AI. So remember, in the short term, what's happening is we're building data centers everywhere, and that's actually putting pressure on all kinds of goods and services that go into building these things. So that's actually probably pushing inflation up at the margin. In addition, it probably raises the neutral rate. So in the near term, you're not looking at something that would immediately call for lower rates or that would be lowering inflation. Over time, though, sure, it can be if it's expanding potential output, which is what higher productivity is. Then it actually can be. But I think it's an empirical question because it's really is the demand growing faster or slower than the supply side. And I think we just don't know that answer ex ante going in. We'll just have to wait and see. Thank you very much.
Wait and see, baby. Good old Jerome Powell. Is that it? That's it, huh? All right. All right. Well, that was something else, to be honest. Got this music pumping still. Hang on one second here, guys. Let me figure out how to shut this down. Aha. 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 All right. All right. Well, that was a little bit exhilarating. Let's see what's about to happen here. The Bitcoin price got a little bit of a bearish div here on the 5-second. Let's get our music back on. Ow! It's too loud. Ah! Just blew my eardrums out. Oh. Whew! Well, honestly, nothing has changed, guys. There's obviously nothing to talk about. Jerome Powell has nothing to say. Essentially, y'all, essentially the thing is this. I mean, if we close the candle below the value area, And that value area is 70,000. Let's actually double check on our 4-hour time frame. Yeah, we closed the daily candle below 71.5, and it's really not going to be looking good, guys. It's really not going to be looking good at all. Let's see what's happening on a low time frame. So we're holding above POC. This could be a little bit of a move to the upside. We're ranging within this sideways range. Shouts to everybody in the chat. Make sure to like, make sure to subscribe. All right. Make sure to like, make sure to subscribe. The 5-second time frame, guys. I just want to show real quick. The 5-second time frame, whenever you put in a high, and you put in a higher high, and the 5-second money flow gets lower like this, the momentum waves get lower like that, it always, not always, but yeah, most of the time makes for a good scalp, honestly. You know, a good scalp. If you're looking for low time frame scalperoonies, that's the way to do it. Low time frame scalperoos. Any giveaway for today? No, but here's the thing, guys. Tomorrow, we're going to be giving away a lot of money. All right. BLOFIN's going to be giving away, like, I think 10 grand. So make sure to like, subscribe if you want some giveaways. All right. Because BLOFIN's going to be giving away the juice. Giving away the juice. Giving away their juice. All right, let's see what happens here. All right, I've been taking some scalps. I've been taking some scalps behind the scenes here during the FOMC. And I haven't been able to do it publicly, guys, because I just don't have the confidence right now. I took 3 losses today, 4. So I haven't really been, I don't have it in me. I don't have it in me to show. But we've taken a few trades. I've taken a few trades. These are the trades that I've taken here for the past, since Sunday. All right. The ones I've taken on stream, well, not on stream, but the ones I've taken during the press conference. Got a short, got a long, got a short, got another short. And I think in net, that's about 1,700 plus another 3. So you're talking, you know, 2 grand, about 1,400, about 1,400. Not the worst, not the best. It's been a really weird day for me, guys. I gotta be honest. It's been a really strange day for me as far as trading goes. I just haven't been in that zone, man. But I do want to just say this. BLOFIN, where I'm currently trading these, is going to be giving away like 10 grand to people who are signed up to my scalping group, which is in my Discord. If you join, well, if you sign up using my links in the pinned chat, you get access to my private scalping group, which over here, let's take a look, in the Discord, you can input your user ID. If you want live scalping, you can input your user ID, sign up to ANTARCTIC, sign up to BLOFIN or KCEX. You get VIP fees plus access to my private scalping group. All right, that's going to be going live very shortly. Yeah, let's see what else we got going on here. Yeah, so I don't know. I don't know what's going to happen with Bitcoin. If we lose the POC, we're probably coming down a bit lower. We've just lost the POC. So let's see what we got here. Let's see if we come down to the golden pocket. Hit a little another take profit at the golden pocket. Shout out to my man, Divine Hood. He shorted the bearish absorption. Yeah. I mean, I'm still in this short here. I can't wait until tomorrow. Tomorrow's going to be a fresh day. Tomorrow's going to be a fresh day. It's been a weird day for you too. Yeah, I got sliced up today, man. Not gonna lie. I took a beating today. But it happens, man. Put the chain on and boom, you're a better trader. Yeah, it happens. Yeah, I share the losses. I share the wins. I share the losses, guys. It is what it is. Like, I'm trying to keep it as real as heck. And trust me, heck is real. People pretend like it's not until you're there. And then you're like, dang. I always knew it was real, even though I didn't want to believe it. Splash is feeling off today, too. Yeah, it's a weird day. I don't know, man. It's just been a weird day of trading for me. You didn't get the lower fees for Antarctic? Well, you should. You should get the lower fees for Antarctic. You should get the lower fees for Antarctic. If not, go into the support channel that's in the Discord. Go into the support channel in the Discord. And they'll hook it up. You should have 0.02% market order, 0% limit order. You will get them if you use my link, all right? BLOFIN good in the US? Yeah, BLOFIN is good in the US, all right? BLOFIN's good in the US. AX, Antarctic, AX obviously is decentralized, right? So Antarctic is decentralized, no KYC ever, right? This is a decentralized exchange, all right? Antarctic is decentralized. Everything is, you're holding all your own assets in your own wallet and all this and that, right? You're not putting your money into a platform. That's the benefit of Antarctic. The benefit of KCEX is insanely low fees. However, you have to just be aware that the model, the business model KCEX uses is, because it's a newer exchange, their fees are very, very low because they want people trading on the exchange. And eventually, once they start getting the volume they want, they're going to up the fees on you. The problem with that is it's essentially like they're taking a loan, right? Because they're not really making money right now. They're just trying to get people on the exchange in the hopes they make money later. So it could, depending on market conditions, the whole thing could just fall apart, right? So you have to be aware of that if you're trading on KCEX. I'm aware of it and I don't care because when I trade on these exchanges, I'm keeping, 10K, 20K, 30K on the exchange, and I'm using leverage. So in the event it goes down, I'm not losing my whole dang account. I'm losing like a couple $1,000s, right? And in the meantime, I'm enjoying those fees. You get what I'm saying? So BLOFIN is legit, super legit. Their model is different. Their model is they're making money on our fees. And Antarctic is decentralized. Based on Elliott Wave, we're likely to make another lower low. Imagine dying and saying, dang, I should have listened. I know. You think I take losses like a professional? Well, I appreciate it. I mean, the thing is, like, in all seriousness, if you've been in this game for any length of time, then you should not be affected by losses. I mean, yeah, they affect you in the moment, like it sucks, and you're like, what the heck is wrong with me today? Like today, I made so many mistakes. I can go back and I can tell you exactly what my mistakes were, right? I took bad trades. I missed good trades today. You know, it is what it is. That's always going to happen. I was on such a good winning streak, really. Like, I was just on fire. The past 3 weeks, I've made a lot of money in the past 3 weeks. So even though I'm down today, it literally doesn't bother me at all. I'm still up in the big picture. And even if I continue to lose, like I trust that the big picture is going to be the right direction eventually. Right? That's what trading is. You're going to go through your winning streaks. You're going to go through your losing streaks. You're going to have bad days psychologically. You know, I can go back and map out my day of, first of all, I woke up feeling really tired and foggy-headed. Second of all, I took the first trade of the day, and if I'm honest with myself, I didn't really have good confirmation. I was just overconfident. I'm on a winning streak. And I thought we were going to get a quick bounce before New York opened from the golden pocket. When that didn't happen, I thought we were going to do a stop hunt of the initial bounce and then pump. So I longed it the second time. When that didn't happen, I said I'll wait for the 786. Well, that didn't bounce either. So I took a loss on that. Then we come down to the actual nice level, which is the value area high. And I'm in such a bad place mentally, I don't take a trade from there. Even though there was some nice confirmation from there. Right? So, it was just one thing led to another, right? But the most important thing about all of this is the risk management aspect. Because I am risking per trade the same amount no matter what. So, you know, you're going to take your small wins. You're going to take your small losses. And then the big wins are the ones that are really going to pay you, right? Like, for example, you know, I've taken my losses. I've taken my losses, right? You know, I've taken a $6,000 loss this week. And you know what's funny? I'm more upset about these $1,000 losses than I am about the $6,000 loss, because the $6,000 loss was a planned potential trade that had a good risk to reward ratio, right? These $1,000 losses here, honestly, pretty dumb, right? But all in all, right, even with these losses here, even with the $6,000 loss, the trades I've taken since Friday, I'm up, you know, 33, 34, 35, 36, 37, 37 grand. So I'm up 30 grand. You know, I'm up 30 grand, like, on this account. So how could I be upset? You know, how could I be upset? And, you know, I'm risking the same amount pretty much on all these trades here, proportionately speaking. That short trade that I lost 6 grand on, I was actually, long story short, I had taken the short from 2 accounts. And one account, so it's the same trade. It's the same trade. The $6,000 loss, I shorted it also on KCEX. So it's really only a $2,000 loss. I had the opportunity to close it in profit, but I didn't because I was sticking to my plan, which included potentially taking a loss, right? So the losses are part of the game. And if you can recognize, like, what you did, you cannot do it again, right? Okay, all right, so we hit a take profit on this little short here. So I'm going to go ahead and put another 50 grand on the trade. Move that stop. Then I'm going to target the lows. 70,820. Yep, you're right. Not being in trade is also a position. Very valid point, man. Why do guys cross? I'm using cross on Antarctic because I have way more money on here because it's not you know, you're not putting the money on a platform, right? It's all in your own wallet. So I have a lot of money on here, and there's no way like you're gonna get liquidated unless, I mean, my liquidation price is, you know, $136,000. You know, there's just no way. I could change it to isolated. I just haven't. I'm usually using isolated because I have very little money in the account, and it would be real easy for that whole thing to get liquidated on cross, you know. But maybe I probably should use isolated in case something weird happens with a stop loss. But I don't think it will. And if something weird happens with the stop loss, I trust Antarctic will make it right. I trust that they will make it right. You know? The low is 70. 863. Oh, interesting. This is this is actually BLOFIN here. This is BLOFIN here. We are at a local GP, so let's see. Shout out to our super chat, first of the day. What's the difference of being greedy and letting winners run? Many times I'm in a trade and it goes back to break even. Here's what I say is lock in a profit and then let the winner run, right? Like, you can't be greedy if you've already made money. Step 1, don't lose money. Step 2, make a little money. Step 3, get greedy and let the runner run, right? I mean, worst case scenario right now on this trade, I make $500, but I'm trying to let the runner run here, right? I could close it out right now for a $650 profit, but I haven't lost money. I've made a little, and now if I come down here, I could make my $650 profit and still be in the trade in case we dump more, right? So those are the 4 steps I'd say. Is the missing money in the U.S. debt to make an underground civilization for the elite billionaires? Can I confirm? Of course I can confirm. Of course I can confirm that. Sounds legit. Should be lifetime fees on Antarctic as long as you're signed up under me. You should always have that fee structure. You know? Am I long or short? I am in, actually right now, I am in one Bitcoin long trade from one Bitcoin long trade from 65,000, 67,985. 67,985. All right. I'm in one Bitcoin long from 67,985 from a long time ago. That's it. But I am in multiple Bitcoin shorts right now. The true trades you see on the screen right now are shorts. This down here is a take profit for the short. And this up here is my current entry. Shout out to personality. Remember, Jason was never suicidal. That's right, guys. All right. If anything happens to me, the Illuminati come for me. Am I not longing? Well, I was in a long. It got stopped out. So. Got stopped out for a $147 profit. So. Yeah, so I'm not long anymore. I've got my I've got no longs open right now except for the one I'm in from 67.9. Yep. What are my opinions on the higher time frame looking oversold? Well, you know, I've been bullish all week. I mean, you know, what can I say? I need to come back to the charts tomorrow to give you any real opinion, honestly. I've had a really weird week. I made a lot of money this week and last week and the week before. And now it obviously looks bullish. It looks bullish, but if we lose 71.5, that really is not a good sign for Bitcoin, guys. Like, I definitely would become much more bearish if we close the daily candle below 71.5, because now we're closing below the value area high of the range, and that would kind of invalidate everything that we're looking at here. But keep in mind, I am looking for the bounce from this area. Yeah, I'm not going to say that this couldn't be a continuation here. I would have to look for like a low time frame entry trigger to get long from here. But so far, this is looking not the most bullish. Look at this fake out wick. We didn't even backtest the golden pocket, and now we're about to close the daily candle below the value area high. The last 2 times that happened, guys, big dump, right? So I'm gonna have to come back tomorrow with fresh eyes on everything here. You know, I really need fresh eyes because, like I said, today, all my ideas did not work out. I shouldn't say all of them. I mean, the main ones, the main ideas I had, right, did not work out for my day trades. So tomorrow, after we get whatever happens tonight, I'm going to be back with a fresh brain at the drawing board. I'll have my bias and I'll have my trading plans, you know, and I'll be updating everybody in the Casper Crew VIP Discord on exactly what I'm doing. Is the Illuminati nonsense? No, I mean, the Illuminati is a real thing, for sure. Is 80K still a probability? If we're closing candles below value area high, definitely not. Definitely not. Right? Definitely not. At least you got a juicy short. Yeah, at least I got a juicy short. If I close the short right now, I'd be in the green. The profit right now on the short is, if I'm going to talk about my realized profits on the day, then I'm not in the green. But if I were to close the short, I'd be in the green. But I am holding the short in case of massive dump, like really, in case of massive dump. 57K, 49K, choose your level. I'd say 39K is the next big level I'd be looking for. The level that I would be looking for. $69,800. $69,800. Ooh, I just got an electric shock. You know, it's not good to be streaming outside by the pool, guys. Well, I am. What is 69.8? Let's zoom out here. We have the Saturday low, and we have that POC at 69.8. I mean, yeah, man, that's this is the level that I'm looking for a long in. So let's see what happens, right? I'll probably be asleep when it happens. I don't think I'll be trading after this stream. I'm pretty tired today. I'm pretty dang tired today. How many footsteps? I don't know. I don't have a counter. You're waiting for 57K? I think that's probably going to happen. People don't want to understand that we are still early in the bear market. We're not really early in the bear market. Like, here's what I'd say. All right, we are. What chart is this? Let's go to the index. Let's go to the weekly. We're not early in the bear market. we are in the buy zone of the bear market. We are in the place where the money flow is red while the market structure has changed on the monthly. So if we mark out exactly where that is historically, you want to be buying while the money flows in the red after the change of structure. So this was the time to buy in the 2015 bear market. We changed the structure with the money flow cross, and until it turns back blue again, this is time to buy. Last bear market, structure changed right around here after the money flow crosses, and you buy until the money flow turns back blue again. You're buying here. And so right now, structure has changed. Money flow has crossed red. So basically, this is the time to be buying until the money flow is back in the green. All right, so depending on how long the bear market lasts, in 2015, that was a year. In 2018, that was about 200 days. The last bear market, it was about a year. And so now, let's assume it's about between 200 and 300 days. It's gonna put us right around the fall, right? Which is gonna come really quick. I say between the summer and the fall is the bottom. And so, yeah, now is the time to be buying Bitcoin, for sure, on spot. I'm not gonna say the bottom's in. I expect 1 or 2 more drops, but we are not early in the bear market. We were early in the bear market back in November, right? Back in November, when we officially broke down from the trend line, we were early in the bear market, right? So as soon as we broke down from this, and back in November, we're early in the bear market. That was when I officially decided that I was happy to sell 120K, and I'm not going to buy again until we're under 70K. And I made the legendary tweet on Twitter that I'm not buying Bitcoin again until under 70K in February. And of course, in February, we end up under 70K for our first big drop, right? And so I am expecting another range and drop. Maybe one last FOMO wick below 40K, but then I am expecting us to turn back. But in general, like if you want to zoom out, you know, we have had a 50% correction already. Typically, we get the 70 to 80% correction. That's going to take us right below 40K. So we'll see what happens, but don't get too bearish when things are 50% off, you know? Don't get too bearish when things are 50% off. I think we have I think the bottom of the bear market is closer than a lot of people think, right? I think from where we're at right now, it could be as short as, let me get my measuring tool. It could be as short as the summer, yeah, June, July, and as late as next year or January, you know, depending on historic cycles here. I wonder what's going to happen with the Bitcoin price, yeah. You know, I don't know. What's my stop loss for the current short? There is no stop loss, ha 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 ha. Nah. Stop loss is at the entry, man. This is just free money right now. Yo, shout out to New Earth Guardian. Big shouts to Mad Malfice. 41K is the M2 bottom this cycle. Yeah, that's pretty much right around my target. A dip below 40K just to freak everyone out. I don't get why I need to add collateral on Antarctic if it's a DEX and connected to my wallet. Okay, so technically the money is not in your wallet. It's through a smart contract. Everything is happening through a smart contract on the blockchain. So you're basically putting money into a collateral wallet, but it's all via smart contract. Didn't want to be freaked. Oh, thank you. Thanks. Shout out to my wife. She let me know that the pool cleaner's coming in 15 minutes, so don't be freaked out if there's a random guy behind me. If he is, I'll ask him his opinion on the Bitcoin price. You know? All right, we hit that take profit. Like what? Like taco seasoning? I mean, taco seasoning, but like, is it just spices? Like what spices are you talking about? Spice me up? What do you got? Well, it is liver and kidney and heart. So, a little spice, yeah, would make it taste better. Well, what do you got? Well, what are you going to put on tacos? What are you going to put on taco meat? Is it a sauce? Does it have sugar in it? Okay. Yeah. Yeah, just put like salt, pepper, garlic, onion on it. Yeah. That'd be great. The SPGO. Yeah, the SPGO. The old SPGO. Would I consider longing a sweep of the low? Yeah. I'd much prefer Saturday's low, but yeah. I would consider it. Your pool cleaner told you to buy Bitcoin at 125K? That seems right. That seems about right. All right, let's see what happens here with this this short trade. Still open, about 50 grand on the trade. We took this local low. I'm gonna put 50 grand on the trade again. Got another 50 grand on the trade. We're gonna shoot for 78.12. Is that even worth it? That's not even worth it. Oh, whoa, 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 whoa. Let's go to the weekend lows. Let's see if we can't get that. Let's see if we can't sweep the weekend lows. Let's see. Yeah, SPGO is a good combo for sure. You got chopped up. I got chopped up too today, man. Yeah, it was not the best day for me. 4 losses. Put my cam to the bottom left of the screen. How come? You thought you add and then take profit? Yeah, this is different. This is different because this is called a YOLO. A YOLO trade, which basically is you're just trying to see how much money the market will give you. Like, you know, once you've already like made some money, you just kind of see how much money the market will give you, and you just keep, once your take profit gets hit, like when we're in a slow bleed like this, my take profit gets hit, and I'm not going to add before my take profit gets hit. I'm basically going to add after it gets hit because it will ruin my entry, but it doesn't matter. I'm not trying to be in a swing trade right now. I'm just trying to see how much money is the market going to give me, you know? You get what I'm saying? How much money is the market going to give me? It looks like the market's going to give me about $750. Preparing for wars in the long here. That's cool, man. I hope it plays out for you, bro. That's a nice 1 minute divergence right there. Money flow looks like Garbaggio, but ooh, the 5 second looks absolutely beautiful there, to be honest. Ooh, the 6. Man, if only we took that overall low. But yeah, at bottom of range, we got some nice bullish divergence here. Yeah, I hope it works out for you preparing for war. I'm sure it will. You're the man. I'm actually going to close this out now. All right. Not too bad. Not too bad at all. All right, guys, I'm gonna head out. I'll be back tomorrow with fresh eyes on the chart. Hope everyone's blessed and has a wonderful evening. Thank you for watching, subscribing, clicking the bell, and I'll see you guys next time. Peace.